Understanding operating income before depreciation and amortization, OIBDA. Operating income before depreciation and amortization, OIBDA, is a vital financial metric that offers deep insights into a company's operational performance. By stripping away certain non-cash expenses and financial factors, OIBDA highlights the core profitability derived solely from a company's core business activities, making it a critical tool for investors and analysts interested in evaluating a company's financial health. What is OIBDA? OIBDA serves as an indicator of a company's ability to generate earnings from its main operations while managing its operating and production costs. This measure excludes depreciation and amortization, D&A, interest expenses, and tax implications, focusing solely on revenue production and operational efficiency. Key characteristics of OIBDA. Core business focus. OIBDA analyzes profitability from core business activities without the noise of capital investments and financing costs. Exclusion of non-cash expenses, depreciation and amortization, while accounting considerations, do not reflect cash flow, hence, they are added back to assess operating performance genuinely. Non-GAAP measure. Unlike measurements mandated by regulatory bodies such as the SEC, OIBDA is non-GAAP, which means it provides flexibility in financial reporting, allowing businesses to offer more relevant insights into their operating performance. Components of OIBDA. To fully grasp OIBDA, it is essential to understand its constituent elements. 1. Operating income, OI. Operating income is profit from business operations, calculated by subtracting operating expenses, like selling, general, and administrative expenses, from gross profit. Gross profit is derived from sales revenue minus the cost of goods sold, COGS. 2. Depreciation, D. Depreciation concerns tangible fixed assets. Companies spread the expense of an asset over its useful life, which affects net income. For instance, if a business purchases equipment for production, it expensed the cost over multiple accounting periods rather than all at once. 3. Amortization, A. Amortization applies to intangible assets, such as patents. Similar to depreciation, amortization allocates the cost of an intangible over its useful life, thus reducing taxable income each period. 4. Interest and taxes. Typically, interest and tax expenses are excluded from operating income to derive OIBDA. However, if these expenses are reflected in operating income, they need to be added back to accurately gauge OIBDA. Calculation of OIBDA. To calculate OIBDA, the following formula is utilized. Backslash text, OIBDA equals text, operating income, plus text, depreciation, plus text, amortization, plus text, interest, if included, plus text, taxes, if included. Practical example of OIBDA calculation. For illustrative purposes, let's examine Walmart Incorporated, OIBDA for the fiscal year ending January 31, 2021. According to their financial reports, the operating income was $22.548 billion, and the depreciation and amortization totaled $11.152 billion. Hence, Walmart's OIBDA would be text, OIBDA equals 22.548 plus 11.152 is equal to 33.70 text, billion. This metric provides a clear view of Walmart's operational efficiency and revenue generation ability. OIBDA versus EBITDA. Both OIBDA and EBITDA, earnings before interest, taxes, depreciation, and amortization, serve as profitability metrics, but they originate from different financial baselines. OIBDA starts with operating income, focusing purely on core operations. EBITDA starts with net income, encompassing a broader perspective of earnings that may include non-operating revenue and expenses. This distinction makes OIBDA particularly useful for comparing companies within the same industry by focusing on their core operational efficiencies. Importance of OIBDA. Understanding OIBDA offers several advantages. Investment decision-making. Investors can make informed choices by assessing a company's profitability independently from financing and accounting practices. Operational insight. Analysts can evaluate how effectively a company is generating income, isolating operating performance from potential market fluctuations. Performance comparison. OIBDA allows investors to compare companies with different capital structures effectively, aiding in deciphering operational strength. Conclusion. Operating income before depreciation and amortization is an invaluable tool for analyzing a company's financial health. By focusing on core operations and ignoring extraneous factors, OIBDA provides a clearer picture of profitability. For investors and analysts, this metric enhances decision-making capabilities and ensures a more nuanced understanding of a company's performance in its industry. As businesses continue to navigate a complex financial landscape, tools like OIBDA will remain critical in assessing and enhancing operational efficiencies.